In this video, I want to do a quick recap of understanding how the market trades from level to level. So we're just going to jump right in now. We're looking at chart 4 of the 4-chart setup. And this was prompted from a question from an alpha in the trade room near the end of the trading day. Really asked about levels and how to understand at a fundamental level how the market trades level to level. So we're just going to dive in. What I'd like you to do is just focus on the levels here. We're in chart 4 and don't focus on the indicators. We could find reasons and also reaction areas in the other charts of the 4-chart setup, but just focus on levels. So that's what we're going to cover here. So let's just jump right in. So first up, pre-market. This is pre-market. There is a level created right here. And we would have called that a strong level, pre-market. Now, when the market opened, which is right in this zone here, so the market opened right down here, the market pretty much went up and tested that level. Now, the first thing about levels, if you're in the training or you've been following us for any amount of time, you know that you should always expect an overshoot. That's one of the things I think in trading that isn't taught more, or really isn't taught more, which is everything is a zone. But one of the best ways that you can actually not be surprised by things is always expect to trade based on an overshoot of a zone or a level. So here's a prime example. So we have a level right here, and that level is right at 415, 423. By the way, we're looking at the NQ. I should have told you that. The NQ, we're on the 4-chart setup. This is chart 4. And you'll see we got an overshoot of that level. Now, what happened there? It created a new level. So there's a new level here. Now, from there, if we look and say, okay, well, what occurred in the price action after this level was breached? It was an overshoot of that level, created a new level. Well, it broke through that level, as we see here. It broke through the previous level. It lost the level, and it sold off. And you could say, well, why did it stop here? Why did it create a new level here? Well, this is chart 4. Actually, on chart 1, if we had the 4-chart set up here and you could see it, you'll see that there was a reaction area right in this zone, and this is why this level was created. Keep in mind, I say this, we trade charts. We trade just indicators. We trade price action. We trade just charts. So when I say this is the reason for it, these are reliable, predictable things that we can hang our hat on that we see time and time again. So this level was created from a reaction zone in another chart. You notice when this level came up, what did it do? It came up and it kind of messed around here in this zone here, kind of messed around and really trended for a little bit. Didn't mess around with the VWAP. And then it went and retested the level again. So here, this upward level. And what did I say for maybe those that are new? What should you expect on levels or zones? Always expect an overshoot. What do we have here? We have an overshoot of the level. Level comes up, overshoot of the level. We have a reaction. What is a reaction? A reaction is the opposite direction of where price is going. We have a reaction back down. Now, what do we actually see? So, and let me see if I can select another tool here. So the trading platform you see me using here is Sierra chart, and this is the 4-chart setup. So we actually do have an arrow. So what happens there? From that point forward, or from that point, that overshoot of the level, it comes down here, and there is a level here, and what does it do? It overshoots that level. Now, for those that are wondering, maybe, and if you're new, obviously if you're trading the system, you understand that, hey, chart 4 is a control chart. It's not an entry chart. You would go to your entry chart. You would wait for confirmation that this overshoot's going to hold. And then you could either trade in a predictive style, where basically you trade with the scale-in ratio and understanding that the market's going to give you at least one opportunity to get out at break even. Or what you do is you go to chart 2 and you wait for confirmation of not only the overshoot of this level, but that this level is actually going to hold up. And you'll see there's a cascading effect on chart 2 when actually these levels hold up. So it's very clear when that happens. So what do we see here though? We see an overshoot. We do see that in this overshoot here, we find support at this level and it goes back up. So now we're back up to the upside. Now this is where I want to highlight, this is another pattern you're going to see in levels that you need to really understand and put into your pattern book and your trading pattern book. When a level does get broken through, it's typically going to break through and what we term as an alpha, which is an alpha candle is a decent move. The body's big. You don't have rejection on the move that it's actually moving towards. So you'll see this candle right here. It is an alpha candle because it does a couple significant things. It's bigger than, it's about the same size as some of the recent candles, but it is bigger than the recent candles. It breaks through a key level, a key area, and it doesn't have significant rejection in the direction that it's going. Now, we have this level. Once again, we're still messing around with the same level right here, right around 432. What happens from there? Well, what happens from there, and here's one thing on this. I've identified let's just go through this before I move on and we talk about this breakthrough here, because this whole area here is really interesting, and that's one of the things I wanted to get to, because this is something that typically this pattern plays out in a different way, but there's clues in this pattern that you should pick up on based on the levels. So but what I want to do first is let's just talk about the the number of trades that already exist here. We have one trade here. This is where you'd get confirmation. You probably had one trade down here. You had one trade here. Probably not there. If we're using the 4-chart setup, you're probably right around here where you'd be long. You have one trade here. This one here, I don't think you'd be picking up. This is a weak trade. If you were really super scalping, you might pick up this trade. You have another trade here. It's really an abundance of trades. Now this is where it gets interesting. So you now are testing the level, this level here, at least for the third time, or this would be the second time. So here's the level creation. Here's overshoot of that level, and then here's a breakthrough of that level. You'll notice, what does it do? It comes back and it tests, tests the momentum. You can see down here, momentum and bias switch. Now, I know I said I wasn't going to mention the indicators, so we won't really get into that because I'm hindering us reading this chart a little bit by actually not interpreting price action through our momentum and bias indicators. And the other hindrance is that we are only looking at one chart in the 4-chart setup. So when we get to this zone here, right in here, where it actually breaks through, so the alpha candle breaks through this level, as we see here, and it breaks through, and it creates this some people would call it a range. I guess you could call it a range. This is how you want to use levels in ranges. Especially when you found that the market has shown you, or the market has revealed to you, that a level is significant. This level here, right around the 432, the market has shown you has revealed that it's significant. This level here. Now, one of the things to keep in mind too is this is the weekly open. So it says weekly open. So this is such an obvious trade. When the market comes back and it's going to test the weekly open like this, and when it's already kind of done an overshoot on this is a reaction area, the weekly open. So this would be a run-of-the-mill fade trade right here that occurred right here, where basically the weekly open's tested, weekly open holds, look at the other charts for confirmation. So that's one of the things I wanted to mention, or I just saw as price was unfolding here. The market's still open for another couple minutes here. Now, without distracting myself, let's go back to this area right up here. And when you have a development of this area where it's broken through, your expectation, and I'm going to get into the indicators a little bit, but your expectation is that the momentum indicators, so when we look at the momentum indicators, the chart has switched over from momentum and bias long. So it's momentum and bias long generally when you see a switch over like this, you do see a continuation. And you see somewhat of a continuation here, but you also have this range area here. Now, the other thing that I keep saying this area also correlates to a reaction area on one of the other charts, but here's how to read this range area. You'll often see me do this in streams where I say, hey, the most important level is here. Let's use another color. The most important level is not there. Let's go here. I'm still trying to build the muscle memory on CR chart, so please forgive my slow drawing. The most important level is here, and the most important downside level is here. As far as where the market's going. Now, early in this, you would say the most important level was here. Early in this. It'd be a little bit lower. It'd be lower than that, but you would say the most important level is here. This is what you would say. And then when this new level is created, this becomes a new important level. Now notice a couple things. That level is tested. This is a great trade. Call the bluff on that. When you see something like this, call the bluff on that and trade that. Go short. As it comes back down, you notice that this level is tested. There's an overshoot of this lower level right here. Actually test the RDA. That's a great trade right there on the RDA. These are run-of-the-mill trades that we do every single day. So right there, an RDA trade. If you would have traded that, that would have been from right around, let's say, 430 all the way up to 450 or so. Would have been room for that trade. But what I really want to highlight here is how this level, the 432, has remained significant. Because look, when it was given up again, here finally right around kind of the tail end of the market, when it was given up again, what happened? Well, when it was given up again, we have kind of a major sell-off, or not a major, but a pretty decent momentum move here to the weekly open. So when this level was given up again, and this immediate level that was our new important level that you should watch if the chart's going to go short or stay long. Once that's given up, it really sold off and it retested the weekly open again. And to really wrap up here, I would suggest that the weekly open actually is a level unto itself. So this is just the market coming back and testing another level. So let's recap. And I know I covered a lot of different things, and especially if you're maybe new to trading or you're new to the system, the market moves level to level. You should expect an overshoot. The market reveals to you through these levels, especially as there are reactions and there is stalls and the market reacts around, or the market reveals to you the levels that are important based on how it reacts. So the market showed, and just to kind of really wrap it up, early on that this 423 level was significant at some point in time. But then what was even more significant is this level up above, which is right around 432. If you look at the price action here and you look at, remember, nothing in trading is exact. So these lines, these levels, the level definitions are exact. It's very clear when you see a strong or a weak level. But the price action around them is a zone. But when the market shows you something like 432 here, 15,432 is an important level that the market is using. And I feel kind of because I want to jump over to the other charts and show why did this price action unfold like this, because it's very clear when you see the other charts, but I wanted to keep this focused on the levels. But the key thing is when the market reveals to you that a level is important, you should believe the market, especially if you're like us, where you're just straight up chart traders. If you want to just be straight up a chart trader, just technical analysis, then you have to believe what the chart tells you. You have to be able to decipher the clues that the market gives you. One of the clues that the market gives, and it tries not to, but it gives them, is levels and how price action reacts around levels and what happens around those key levels. So developing a trade plan and a strategy for when price gets to those levels or when price breaks through that level is key. is critical. That's really the foundation of creating a trade system. So I'll end with this. If you aren't following us on Discord, you'll see a link down below in the description to follow on Discord. If you are interested in getting started with one of the best speculation systems ever created in humankind, you want to check out rexdogtrading.com. You could join Discord and ask questions as well, so you should be joining Discord anyways, or subscribe here on YouTube. I look forward to seeing you in the next video.